Millions of Americans have already received their tax refund from the IRS this year, and millions more will get theirs in the coming weeks. So, what should you do with your windfall of cash? Joining us now, we've got Adrianne Yamaki, who is the Strategic Wealth Capital founder, managing partner here, joining us here on set. Thanks so much for taking the time.
Nice to see you, Brad.
Absolutely. Okay, so you get this windfall of cash. Immediately, you think to yourself, what should I buy? What should I spend that on?
Yes.
What is the smart way to go about this decision making?
Well, so there are a few things you can do that I would say if you want to take some and splurge and do something, that's great. But one of the things that we're doing with our clients is taking the tax refund, if you're lucky enough to get one, and using it to do Roth conversions. So we've been doing Roth conversions. I know they're very much in the news. We've been doing them for years. But it's effectively a way to prepay some of the tax you're going to pay anyway, right now, while taxes are lower before they go back up in about a year and a half.
Interesting. Okay, and so what if you don't get that windfall of cash? How else should you be thinking about, all right, where you need to best position your own savings, your own funds as well as you kind of look out to the next year and prepare yourself for the next tax season to get that refund?
Yep, absolutely. So there are a lot of deductions. There are actually a lot of things you can do throughout the year to boost to lower your ultimate tax bill. So when we think about taxes, we think about lifetime tax bills. So the reason a lot of people don't like Roth conversions is because it sucks to have to pay a tax bill. Yeah. And the immediacy of it feels horrible. But the idea is when you ultimately, if you're a good saver, right, and you take money out of your traditional IRA, I mean, we have clients who are fantastic savers, and when they're 73, they take it out and they pay a lot of tax. I mean, if you take out several $100,000, imagine you've been saving consistently and doing all the right things, you're not in the lowest tax bracket. So right now, in a year and a half, of the top 5 tax brackets, 4 of them are going back up. So the very top tax bracket's going from 37 to almost 40%, so 39.6. So effectively, taxes are on sale. So by prepaying what you're going to pay anyway, you're effectively locking in that rate, and then the rest of your life, it grows tax-free. And then doing things like contributing to 529s that are state-sponsored, if your state offers a tax deduction, is a pretty big deal. Yes. College funds, really, yeah, absolutely fantastic. A lot of our clients have donor advice funds for charity too. So lots of good strategies.
What are the top deductions that you anticipate are going to, for the tax season 2025, looking back at 2024, yeah, be tapped into by many people?
So a lot of people, I've noticed this when we were going through our clients' tax returns, a lot of people who have 1099 income. So if you're a small business owner, large business owner, if you have consulting income and you get 1099 income, even if you have a side hustle and you have 1099 income, you're not W-2, you can write off part of your home costs, even if you rent, no matter how much you make. So there's a standard home deduction you can take, but if you have a big space and a big office, then you calculate it as a percentage of your home. And that includes, it can be rent, mortgage, property taxes in excess of what you normally would deduct. So a lot of people don't take advantage of it.
And so how do you go about, looking across your expense profile as well with that? Because it's one thing to have these deductions, yes, and be able to write them off at the end of the year, but it's another thing to balance what you actually need to be able to continue to maintain a lifestyle as well.
Yes, absolutely. Well, a lot of these things are just missed deductions. So 529, it's true, it's a savings, and it's not going to be spent for a long time. But a lot of deductions, like charitable deductions, even when I go through my credit card bill and I look at, like my nephew, I bought like popcorn. I think I donated to his like little league. And
the
just
fundraisers,
things like this.
yeah.
Yeah, all the fundraisers.
Okay.
We just don't think about it. But 50% of that for us is tax. Yeah. So even if you just spend and you just pay attention to the stuff that you're donating, to where you're saving your money, putting it into, say, a Roth 401k instead of a regular 401, those things add up and they do make a big difference.
Yeah, let's see if I can donate all the golf balls that I hit into the water, because that certainly is a donation. Thank you so much, Adrianne Yamaki, who is the Strategic Wealth Capital founder and managing partner. Thanks so much.
Thanks for having me.